everybody. My name is Andrei Knight. This is Institutional Trading Strategies. Hope you're in the right place. If not, stick around anyway. I promise it'll be good. Hope you guys having an awesome weekend. Had an awesome weekend, I should say. Hope you're managing the reversals so far this week. A lot of pairs are struggling to find direction. You guys, when things get choppy, your job is not to squint harder. A lot of traders, I always say go for the really obvious setups, the ones that really leap off the chart at you. But when things get choppy, when there aren't clear entries or when things tend to reverse on you midday, a lot of people settle for mediocre trades since there aren't really any good ones. Or they think they have to squint at their charts harder. Folks, sometimes it's okay not to trade. I would rather you not trade than you settle for mediocre. Okay, part of the reason I call this class Institutional Trading Strategies is because the idea is we get at the mindset of what makes a professional trader different from an amateur one. And that's one of the things. Professional trader is looking for a good trade. An amateur trader is often looking to trade. Notice the subtle difference? Absolutely, Naeem. But most people feel pain when they're not in a trade. They feel like they're missing something. And then they get into one of these mediocre trades only to regret it shortly afterwards. When I sit down at a computer, my goal is not to trade. My goal is to make money. Okay, therein lies the difference. And if I don't see a relatively safe opportunity to make money, I simply don't trade. I don't feel an itch to pull the trigger. Exactly, Andrew. So when things are kind of going sideways, like this dollar-yen, for example, that's part of the reason I picked it. Okay, because not only this week, but as you can see, much of last week, we've just been in a tight little range, bouncing on either side of the 21. This is the 21 exponential moving average in the middle. Okay, you can even see, if I go to the weekly chart, right, each of these candles is a week. Look how long we've been in this choppy range. Quite a while. So what we're going to talk about today is how to identify when something does finally give you a clear direction after being stuck a while. Okay, because the other difference between most professional traders and most amateur traders is amateur traders have a system. The system's job is to generate entries. And most amateur traders will take just about every entry signal their system generates. Just because an indicator turned direction or changed color, they think that's reason enough to pull the trigger. A professional trader is not looking for an entry. A professional trader usually has one or two scenarios outlined, what they expect to happen for the week, what they expect to happen for the day, and they either get that particular entry or they don't. Okay, we're not looking for an entry. We're looking for the entry, something that confirms one of the scenarios we're working with. And what I'm going to show you today is how to formulate those scenarios and how to set up each one with a trigger. So if and when it activates, you're ready to pounce. And if you don't get that particular entry, or if you get an entry in the opposite direction, you wait. Because you're not looking for an entry to trade. You're looking for the entry because it's got a high probability of working out. That's the key to consistent trading. Don't just work with entry signals, but think in terms of scenarios. What are the possibilities? Which of those possibilities is getting activated or about to happen? Make sense? You want a higher win rate, you got to teach yourself to be more selective. Narrow down your list of choices. That's the goal of analysis. To narrow down the kinds of entries you are open to taking. If you take every single entry that your system generates, well, guess what? You're not doing anything different than a robot might do. And as most of you probably know, you let any robot run long enough unsupervised, it'll start taking money out of your account. So clearly taking every single entry signal is not the goal. If it were, you wouldn't need classes. You wouldn't need to learn how to trade. You could just buy one of those 99 specials and let her rip. But anybody in here ever made $1 million using one of those robots? Go ahead. Don't be shy. Yep. That's what I mean, Naeem. Ever made $1 million with one of them? Anyone? That's what I thought. Really, Boyke? Okay, I thought so. They probably did do some trading, Naeem. Question is how much or how well. So don't be a robot, you guys. There's obviously more to consistent results than just hunting for and taking entry signals. It's about knowing how to differentiate a good entry signal from a bad one. And that's what I'm going to show you how to do today. How to identify those scenarios and how to trigger one versus another. And Boyke, because this thing has been ranging for a while, I'll also show you how to trade ranges. Some are worth trading, some are not. Now, if you're new, if this is one of your first classes with me, don't worry about all the stuff on the chart yet. It's only overwhelming if you look at it all at once. Okay? I'll explain each tool as we use it. Okay, to start with, as I mentioned, the middle of my chart, the purple line, is a 21 exponential moving average. Okay, 21 EMA, kind of the center of my world. That's where my analysis starts. Am I above it or below it? Am I going towards it? Am I going away from it? And is the 21 itself aiming up or down? And you can see for the past week, it's been flat sideways. We don't have a trend. We don't have a direction. The 21 is going sideways. We're bopping up and down above it or below it, but we're not really smacking against it as either a floor or a ceiling. There is a third choice when somebody asks you what direction is price moving. People always forget the third choice, sideways. Minimum risk reward, Dhruv, I like to see a 3-to-1, meaning 3 times the difference to my target as to my stop. You get the implication? I know where my stop and target is before I ever pull the trigger. Need more information than just the entry by itself. So if I don't know my risk reward, or if it's not good enough, I don't care how good the entry signal is. That becomes a high-risk trade. Now, for ranges, I'm a little more lenient. The definition of a trend is higher highs, lower lows. It implies you're going to go further. Right? Ranges, you tend to bounce back and forth between 2 levels, or in other words, not go as far. So I'm a little more lenient on ranges. I might take a 2-to-1. But the point is, the moment your risk reward becomes 1-to-1, that's 50-50 odds. That's gambling. I'm not here to gamble. Remember, my goal is not to trade. My goal is to make money consistently. It's not the same as all the time. There will always be losses no matter how good you're planning and strategizing. But the goal is more winners than losers over time, bigger winners than losers over time. That's where risk reward comes in. So over time, regardless of the outcome of any one individual trade, your account is growing. Okay, so let's talk about scenarios and how to formulate them. And then I'll show you how to pick one versus the other. What we're going to do essentially is plan out the second half of the week for the dollar yen. And if it doesn't happen tomorrow or Friday, then it will early next week. No, I want to do the dollar yen. That's why I put it on the screen, Farhan. All right. So what you'll notice here is we found support right on this line here, this dim little line. I don't know if you can see it. This is essentially my 21 from my weekly chart. Okay, same 21 exponential moving average. Okay, but this time from my weekly chart. So we know where we're finding support. I'll mark it here so you can see it a little better. Okay, currently at 102.08. And we also, if you look at the last two highs, we seem to be finding resistance here. So let me mark that. Just a hair, just a pip above my weekly R1, as you can see, at 102.62. That seems to be the level we're ranging in between. So very simply, you guys, I will know when we're ready to kick off a new trend when I not only break below this 102.08 level, but also come up from underneath and test that level as resistance. See here, there we go. Okay, so it's not enough just to break below. Look at how many wicks I have sticking out of this range. 1, 2, 3, 4 on top. 1, 2, 3 below. Out of those 7 times we poked this line, how many turned into new trends? 0 out of 7. Okay, so keynote, this goes for trend lines too, not just horizontal lines, you guys. If you're a breakout trader, let me give you a little tip that'll make your win rate go way, way up. It's not enough just to break out. You got to come back and retest from the other side. Okay? So if we break below support, we got to come back up from underneath, test that level as resistance now. And then open below it. Oops. Not sure why my drawing tools aren't working today. Oh, I know, it doesn't want me going off the chart. Okay. But you get the idea. Break below support, retest it from underneath as resistance. In other words, I need a daily open beneath 102.08, establishing this as resistance. Remember what I said about the 21 being in the middle, being neither a floor or a ceiling? Same thing. Right? This candle spans it. This candle spans it. But none of these candles really identify this as a floor or ceiling. Same thing here. When this 102.08 is my ceiling and not just something I'm poking, then we're ready to move lower. And same thing for the upside. Okay, if I break out the top and I break 102.62 as resistance, I need for price to come back down and establish that level as support, as a floor. And then I know we're ready to go higher. Okay? And until one or the other happens, I'm not expecting a bullish nor bearish day. I'm expecting to keep trading within the established range. Okay, let's work with possibilities now. Let's say I break out of the top and I retest this as support. Next question I got to answer, well, how much higher could this go? How would we go about answering that question, you guys? Could be. Absolutely, Adam. That's one way to do it. But what if we don't get quite that high? Fib. Very good, Andrew. And what makes this a good candidate for a fib? Anyone know? Because it's got a zigzag. Awesome. Yeah, you guys got it. Good job. If I see a zigzag, that makes it a Fibonacci candidate. So let's throw a fib down. See what we're looking at. Do we have snaps on the in-between levels? Either bodies or wicks. Yeah, we seem to, don't we? And a 50% retracement gives us usually a 161 extension. And remember how I have to break the ceiling at 102.62 and then retest it as support? Well, guess what? My 0% fib, my prior high, gives me exactly a good point to do just that. Okay, so how do I know if I need to activate the upside scenario? Trading from 102.62 up to 103.58. Very simply, I will see exactly this pattern. And either I see it or I don't. Look at how much easier my job became. Okay, now this is a prior high, particularly with ADX under 30. It's got a strong chance of bouncing me down. But if it bounces me down and I find support at 102.62, that tells me that I have a much higher chance of breaking this resistance level the second time around. Because look at what none of these other candles did, right? They poked this 102.62 level, but none of them closed above it. None of them opened above it, establishing it as a floor. That's something all of these four prior candles failed to do. So when I see exactly this pattern, I know it's time to activate this scenario. And obviously, I need the support of my indicators. When that happens, I know that's the day we're likely to kick off a bullish trend. I activate this scenario. Keep in mind, that's not an entry yet. I've chosen one scenario versus another. If I decide, yeah, I'm looking for a bullish trade that day, now I go to the 4-hour chart. Those of you that have been in my classes before, you know I use the 4-hour for direction. If I'm expecting a long trade sometime that day, then I go to the 4-hour chart, wait till it turns bullish. Right? If I'm expecting to buy sometime during the day, but currently my direction is down, I got nothing to do yet. First part is scenario. Second part is timing, the right time of the day. Third part is looking for an entry in that direction. Okay, 1, 2, 3 approach. So once I activate the long scenario with a favorable daily open, with a favorable setup leading to that daily open, then I go to the 4-hour chart and I wait for the right time of day. I wait for the 4-hour chart to turn in the direction of the scenario I'm favoring. Once the 4-hour lines up with the daily, then and only then do I go to the hourly chart, which in my case is my primary trading time frame, and I wait for a long entry. If I get a short entry, it doesn't matter because it doesn't fit that scenario. You see the difference of the top-down approach? Now you're not guessing. Now you're not pulling the handle of the slot machine. You're waiting for a specific event to happen. And either it does or it doesn't. And that's how you see through the market noise. Not a close, Andrew. Let me rephrase that. I'm looking for an open above 102.62. Not a close. Close is the end of the day. I'm looking for an open above 102.62, establishing that level as support. 102.71 is significant because it's our prior high. It's a likely resistance level that would knock us down to perform that test of 162 as support. Okay? Because right now it's resistance. It's a ceiling. In order to activate the upside scenario, I need for it to be a floor. No, I don't care where it closes. I need an open above 102.62. Close is a wick. I don't need to know where price was. I need to know that 102.62 is done being my ceiling and can now hold as my floor. My former resistance becomes my support. Okay, if you wanted an added layer of safety, it's only 9 pips. Yeah, you could wait till we break above 102.71 and enter there. Okay, but the key is not how high you get, because how high could easily turn into a wick on a reversal back down. The key in an upside scenario is where is my new support? Right? You need to push off of something to go higher. And Naeem, now you see on the way to the prior high at 103.91, yeah, that's a good long-term scenario. And that might be a good secondary target. But before we get to 103.91, we have to cross 103.58. Right? This is going to come before this. So I might split this up into 2 trades. Target 1 might be 103.58 because it's an anticipated resistance level. If we break above that and that becomes the new support, I can get in for a little extra and trade from here to here. You're talking about this one back here? Because the more recent one is higher, I think this one will be fresher in people's memory. Okay? If this one had happened after, then yeah, if ADX is below 30, I might look at that as an in-between target on the way to the 161. Okay? But it's convenient that the more recent one is higher. I don't think this will be much of a problem. If it proves to be resistance, it'll be temporary. If it hasn't happened yet, Franco, it will happen. Yeah. So why would I get in just in time to go down? The key when you're buying is where is the floor? What am I pushing off of? Which incidentally is also a good way to place stops. Once you've bounced off of something and it's been established as your new floor, right? Obviously, price going too much below it would signify a change of direction or a change of scenario. Time to reevaluate. Just remember, don't put your stop right on the number, right? Always allow a little padding. Put your stop below 102.62, not right on 162. Same with your target. Put it a little below 103.58, not right on it. You got to account for bid and ask spread, and you got to account a little bit for noise. Because sometimes things poke, right? This is still support, but we have poked below it a few times. So what's a good distance for padding? Well, look at a recent candle, particularly the wick. Look at the length of a recent wick. Take that and add your spread. That's how far below 102.62 I would put my stop. Okay, good. So that's my upside scenario. If I establish support at 102.62, I'm trading up to 103.58. Good. Let's talk about the downside. What if we break below 102.08 and establish that as my ceiling? How would I go about finding the downside target? And actually, you know what? I can move this line up a little bit. Because it could work out. Let me do that. It could work out that we break below the weekly pivot, find support at the weekly 21, and that's what creates our retest. Okay, this is the weekly central pivot point. If I'm below it and I've tested it as a ceiling, it's a pretty good bet that I'm going to spend the rest of the week moving down. Okay, none of these candles, see, we've been below the weekly pivot before, right? The problem is, and here again, Andrew, that's why the open is so important. We've been below this level, but have we ever established it as a ceiling to push off of? No. We've just spanned it. We've never knocked against it. So in a downside scenario, how would I pick my target? This is a little trickier, isn't it? There really isn't a zigzag. So I can't rely on fibs. If I drew my fib from here to down here, this retracement would be more than 100%. Right? Can't have 100% retracement. That's called a reversal, in which case we'll go with an upside fib. There is the prior low. Once again, that is a possibility. Are there any levels we should worry about on the way down to that prior low? In other words, do we need to split the bigger scenario or the bigger trade into smaller chunks? You could do that, Drew. That's a possibility. That'll give you a target more than likely below 101.51, though. That's something I would do if I go below the prior low. Remember, the fib to the upside, we were trying to identify a target on the way to the prior high. There's no need to worry about a target beyond the prior low until you're below the prior low. Okay? So I might go back that far if I need to find a level below this one. But let's talk about getting to this level first. Is there anything that might stand in the way? I'll give you a hint, you guys. Where did I find my most recent high? Weekly S1. Good, Adam. Notice I'm snapping right to my pivot level. Okay? I don't use every single line on my chart every single time. Notice I didn't really consider the pivot points on my way up. Right? I didn't worry about the R2 or the R3 as potential resistance. Only reason I was concerned about the R1 is because it's been resistance twice. But you know why I didn't mention the R2 or the R3, even though they're on the way to my target? Because I'm not finding support at any of the pivot levels. But, you guys, I am finding resistance at one of the pivot levels. So if I find resistance at R1, I would anticipate finding support at S1. So if I break below the weekly pivot, well, I did break below. If I close below, let me say that, and let's say I find support at the weekly 21, and then come back up tomorrow, retest this as resistance, 102.28, then I'm going to trade from 102.28 to 101.85. If I break 101.85, the prior low is my secondary target. And if I need a third target, then I would go back in history and draw this fib. Because I'm just eyeballing it, but I'm pretty sure this would give me a target below 101.51. 50% retracement, go to 161. Yeah, that would put me at 99.58. Okay? But I need to get to 101.51 before we even worry about 99.58, right? So I kind of deal with things in the order that they are likely to come. So to the upside, I'm looking at a Fibonacci trade because I have a really good zigzag setup for it. In a downside scenario, I'm looking to complete the pivot move that started at R1. And remember, the rule with pivots is R1 to S1, R2 to S2, or vice versa. But I'm not worried about the upside pivots because I don't have downside pivot support. I am concerned about the downside pivots because I have upside pivot resistance. The bodies are snapping right to that level. And it can be a body or a wick, by the way. Here it was a wick, for example. The point is, the pivot is being called out by the market action as an important factor to consider in a downside scenario because it's resistance. Make sense? So I'm prepared with an upside scenario, and I'm prepared with a downside scenario, and for each one, I've got a trigger that would activate it. And when I see a favorable daily open that matches one of these patterns, then I'll zoom to the 4-hour chart, wait for it to match the direction. And when the 4-hour confirms the direction, Then I go to the 1 hour chart and look for an entry in that direction. Top-down approach. Pivots are a support resistance level, Boyke. But there are other types of support resistance. Moving average, prior highs and lows, for example. Okay, they're one type of support resistance. When do I use pivots? When price action tells me to. With a snap. Okay, because like I said, I wasn't concerned about these on the way up. Because I don't have proof of the pivots acting as support. So I don't need to worry about them as resistance on the way up. But I do have proof of his acting as resistance, so I got to worry about their counterparts below on any move down. Price action tells me which lines are important at any given time and which ones I can ignore. I don't have to guess. The price action tells me by how it behaves. Okay, so first figure out which of the two scenarios you're dealing with. Then wait for the 4 hour direction to match that scenario, or confirm it is a better way of saying it. And then look at the hourly chart for an entry in that direction. You see the difference, you guys. My trading just became crystal clear. From then on, it's easy. I either see what I need or I don't. There's no hoping. There's no wishing. There's no chewing my fingernails hoping it goes in my direction. It either is or it isn't. And if it isn't, I keep waiting. Okay, let's talk about the indicators beneath the price chart for a minute. You'll notice I have two main indicators with this blue guy in the middle. I've referred to this a couple times to ADX. ADX measures strength. Okay, that's why it's blue. It's neither bullish nor bearish. It tells you how strong the push is in either direction, up or down, whatever the current direction is. Okay, measures strength. And I've grayed out the positive DI and negative DI lines. I'm just looking at the average. Standard setting, 14. And I've added a horizontal line at the 30 level. Remember I mentioned I have to be concerned with any potential resistance level on the way up to 103.91. Why? Because I don't have the strength to break any potential support resistance I encounter on the way. 30 is how much strength you need to break prior highs, prior lows. And when you make higher highs or lower lows, isn't that our definition of a trend? Higher highs, lower lows. If you were bouncing between two levels, isn't that our definition of a range? So one way to think of your ADX is as a trend versus range indicator. Which brings me to my two main indicators. The one above my ADX, this is called OSMA. It falls into the momentum group. You can also use a MACD here. Notice I even use the same settings as a MACD. The strength of a move, Eric. Not so much of a currency, of a move. Because it can be up or down. So if a move has a strength greater than 30, I'm more likely to break support resistance levels when I encounter them and go on to make higher highs or lower lows. I know I'm in a trend. And when I'm in a trend, the most important consideration to me is momentum. Am I gaining it or losing it? Right? If you're in a trend, you want to know when it's petering out. So when ADX is greater than 30, I look up and I use my momentum indicator. When ADX is below 30, I'm more likely in a range because support resistance levels are more likely to bounce. The indicator beneath my ADX is stochastics. It's what's known as an oscillator. You could substitute any oscillator in here. You can use the RSI if you prefer. You can use the CCI. Any momentum indicator will work here. Any oscillating indicator will work here. Because when I'm in a range, my biggest concern is, am I in a bullish or bearish wave? So, which indicator? Notice right now, one indicator is aiming down. One indicator is bullish. Green is above the red. So one is bearish, one is bullish. Which one do I trust? Stochastics, good. And stochastic right now, notice between these two scenarios, we're currently below the weekly pivot, right? But we have not yet tested it as resistance. Remember I said the retest is the most important thing, not the poking below. Right? This is telling me I need the approval of my stochastic before I start looking for a trade. My stochastic is still green over red. So what is that telling me? Not yet. I got to wait for the green line to cross below the red line. But I'm anyway waiting for a retest as resistance. You see? So the indicator confirms what I'm waiting on with price. That's the proper way to use an indicator. You make up your mind here, above this line, then you look down for confirmation. As opposed to how most people do it. Most people would look at this and say, green over red, I'm buying. You want to buy into this? Be my guest. Don't lead with the indicator, you guys. Work with scenarios. Use your indicator to confirm it. Okay? I'm already below 102.28. I'm waiting to retest it as resistance, and I'm waiting for the red to cross above the green. Then it's okay to short. I'm not buying because it's green over red. See the difference? And here again, Andrew, only if you use them incorrectly. In this case, it's telling me it's not yet time to short. But I know it's not yet time to short because I haven't established a firm ceiling. You don't want to lead with a lagging indicator, no. But it's okay to use them for confirmation. Well, it means you're going to bearish area. Right now, the indicator is still bullish. If I'm waiting for a short trade, I can't take that short until it turns bearish. You see what I mean? Most people use an indicator to signal an entry. I use it to keep me out of an entry until the timing is right. Subtle but very important difference. And same thing in an upside scenario. If I was to come up above the 102.61, test it as support, as of right now, I could act on it. If ADX was above 30, I couldn't act on it until I got a bright candle. Now, out of these two, I do personally think the downside scenario is more likely, but more likely is still not the same as guaranteed. I need that retest as resistance. The reason I say it's more likely is you'll notice price has made a higher high. If I connect the last two prior peaks, if I connect the same peaks on my indicators, and it can be either stochastics or osmo. Sometimes you see it on one, sometimes you see it on the other. The second time around, we failed to make a higher high. So we have a bearish divergence. The indicators are doing something different than price. So it feels like there's more pressure to the downside than upside right now. as of now. And we're below the key level that we've been looking at. What I need now to trigger the trade is a retest as resistance. Okay? And no, it wouldn't, Adam, because I still need to get up here. Here again, I'm not entering because green crossed over the red. I'm waiting for a break retest, and once I see that, I look down to see if the indicator agrees. We don't go by the cross because the cross alone would tell you to buy here. Franco, very simply because it's the weekly pivot point. If it becomes my ceiling, I'm likely to be a bear for the rest of the week. We've been below it before, but we've never established it as a ceiling. And Obina, you're talking about daily pivots. If I go down to my hourly chart, for example, I've got those too. Okay? But when we're doing our long-term planning on the daily chart and above, I'm more concerned with the weekly pivots. Okay. So let's talk about ranges real quick, and then I got to wrap it up. What do you do when you're in a range? You know, what do we do until we break out of this level? And Franco, do you understand why I moved it up? This line was the bottom of the range. But this number is what needs to be a ceiling to give me a hint that we're going to go lower. Okay? So one was marking the bottom of the range. One is marking what would trigger a downside scenario. Naeem, it really depends on how wide the range is. Remember risk reward. Do I stand to gain more than I stand to lose? So you're right in that we look for support resistance, but it's not a hard level. Because sometimes range overshoot levels, sometimes they reverse early ahead of levels. Okay? It's good to have a guideline where you expect support resistance, but it really comes down to what you're doing at that level. For example, notice what happened when I found resistance. I made a doji there with my body below the line. And the next candle opened below the cross of that doji. So it's not just about the level, it's about the fact that I'm reversing at that level. See the difference? And, you know, this was the first candle that's decidedly bearish because it's below resistance and below the doji. If I draw a vertical line and look down, ADX is below 30. Ah, good. Confirms I'm in a range, right? No sense in using range trading techniques if you're not in a range. So I've confirmed that I'm in a range. I've also confirmed that I'm using the stochastics. And what did the stochastics just do? They crossed the bearish. So much for lagging indicators. They actually crossed on the candle before. Okay? It's all about using them correctly. So it's not just that there's resistance here. It's that we found resistance here. We have a reversal candlestick formation, and we have a stochastic flip to back it up. Now look at here. When we get to our anticipated support level, I don't think I would buy just at the support level. For one thing, I had a bearish open. I opened below this level. And second of all, my candles are still bearish, or my stochastics are still bearish. I can't buy if they're bearish. But if I move this one more candle to the right, now we have an open on top of support. And guess what? My stochastics are starting to cross. Okay? So in a nutshell, Boyke, identify support resistance levels, then look for the right kind of candle formation at those levels, combined with a flip of the stochastics in the correct direction. That's how you signal a range trade. Now, these are very wide swings. We're doing it on the daily chart. Obviously, if you're trading on the hourly chart, you would look for the same thing on your hourly chart. What if you're a short-term trader? I still recommend you work with daily scenarios, but now your higher lower time frame becomes, for example, the 5-minute and the 30-minute. Okay? So establish the scenario for the day, wait for the 30-minute to turn in that direction, look for an entry on the 5-minute. Okay? You still have a higher lower time frame, but you don't give up your daily planning. Look at the daily chart once a day. Why? Because you got a new candle open, just like any other time frame. You want to look whenever a new candle opens and reevaluate. That's the idea. And that's institutional trading in a nutshell, you guys. The mindset, not just the entries. Look for a scenario first, then direction, then an entry. All right, I'm going to leave you with some links, you guys, because we're almost starting summer. It's time for some summer specials. I love you guys. So we're going to give you special pricing that we don't advertise on our website just for sitting in on this webinar. How cool is that? First link is my daily newspaper, you guys, totally free of charge. You can either visit that link every morning, comes out at 8 GMT, or you can sign up to get it in your Twitter account or your email inbox. Here's my own Twitter and Facebook. If you want to follow me, stay in touch. If you want to go deeper into my system, how we use each indicator, I go much further into it. I also cover trading psychology, money management, probability, all sorts of goodies. We got some recorded workshops, you guys. You can watch them at your convenience whenever you want. Here's a special link for 20% off. If you found today useful, we do coaching every trading day, twice a day. We set up our scenarios just like we did here in the morning. I leave you to trade for a few hours on your own, and then we come back in the afternoon and we look at what worked out, what didn't, and what we can improve for the following day. Cost for a whole month, you're talking 40 lessons a month, is less than the cost of one losing trade, normally. But I'm going to give you 35% off that. Okay, this isn't going to be around forever, you guys. Just for the next couple weeks. And third link is my weekly video update. Okay, this we call the budget program. You don't get to interact, you don't get any to ask questions, but every Monday morning, I'm going to send you a video. Why Monday morning? Because just like I did on the daily chart, that's where I outline my scenarios for the week ahead, including important price levels to watch on several currency pairs, as well as some commodities and also some stock indices. All right? So, some options for going further, you guys. And at the very minimum, just stop by fxnight.com. Lots of free goodies for you on the website as well. The only thing I charge for is my time. Thank you very much for your time and attention. Really appreciate it. FX Admin, thank you for your patience, letting me run a little bit over. We had a lot of ground to cover today. Appreciate that. Wish you guys all a profitable second half of the week.